The game you didn't know you joined. You were born into a game. You didn't download it, you didn't read the rules, but every single day you're playing it. It's called money. And whether you win or lose depends on how well you understand the system that quietly runs your life. Let's break it down. Level 1. Taxes, the entry fee. You work all month. You finally get paid. But the number in your bank account is smaller than the number on your paycheck. That missing chunk? That's your membership fee to civilization. Taxes fund roads, hospitals, schools, police, and yes, sometimes things you never asked for. Income tax hits what you earn. Sales tax hits what you spend. Capital gains tax hits what your money earns. And then there's Social Security and Medicare, forced savings and healthcare funding wrapped into your paycheck before you ever touch it. You don't get to skip this level. You just learn to survive it. Level 2. Banks, the illusion of safety. You deposit money into a bank and feel secure. But here's what most people don't realize. That money doesn't sit in a vault waiting for you. Banks lend most of it out. This is called fractional reserve banking. They keep a fraction, loan the rest, and profit from the difference in interest. They pay you a little to store your money. They charge others a lot to borrow it. That gap, that's their business model. And when everyone panics and wants their money at once, history shows cracks can appear. Banks aren't vaults, they're middlemen. Level 3. Interest, the multiplier. Interest is the most powerful force in the financial universe. It works both ways. When you borrow, interest grows against you. When you invest, interest grows for you. Simple interest is predictable. Compound interest is exponential. It's slow at first, almost boring. Then one day it moves faster than you expect. Debt compounds too. That's why small credit card mistakes can turn into financial traps. Interest is neutral. It simply rewards whoever controls it. Level 4. Inflation, the silent thief. Your money doesn't stay the same. Even if the number doesn't change, its power does. Inflation slowly reduces what your cash can buy. A little inflation is normal. It keeps economies moving. Too much? Savings lose value. Costs rise. Stress increases. Governments fight inflation by raising interest rates, making borrowing more expensive and slowing spending. It's economic temperature control. Sometimes it works. Sometimes it hurts. Level 5. Recessions, the reset button. Boom, growth, optimism. Then suddenly, layoffs, market drops, fear. A recession is when economic activity shrinks for months. Businesses cut costs, consumers spend less, credit tightens. But recessions aren't permanent. They're painful resets. After contraction comes recovery. The cycle repeats. Level 6. Credit scores, your financial reputation. Your credit score isn't about wealth, it's about trust. Lenders want to know, if we give you money, will you give it back? Pay on time, keep balances low, avoid opening too many new accounts. Your score rises. Ignore payments? It drops fast. The system rewards consistency, not emotion. Level 7. Currency, a shared belief. Money isn't valuable because it's special. It's valuable because we agree it is. Paper bills, digital numbers, even cryptocurrency. They only work because society believes they work. Print too much money? Inflation rises. Restrict too much? Growth slows. Money is trust, organized. Level 8. Investing, making money work. Saving alone won't outpace inflation long term. Investing is how you grow purchasing power. Stocks, ownership in companies. Bonds, lending to governments or corporations. Funds, diversification made simple. Real estate, property that can generate income. Investing carries risk, but not investing carries certainty. Certainty that inflation slowly eats idle money. Wealth is rarely built overnight. It's built through patience. Level 9. Value, the real wealth generator. Money follows value. If you create something people want, need, or admire, they exchange money for it. Skills create value. Solutions create value. Scarcity creates value. Perception creates value. The market pays for usefulness or for the belief of usefulness. Understand value, and income follows. Final level. Time, the ultimate asset. Time is the one resource no one can buy more of. Most people trade hours for income. Some people use systems, skills, and investments to make their hours multiply. Time plus compound growth equals financial leverage. Wealth isn't built in weeks, it's built in decades. Small amounts invested consistently over long periods become life-changing sums, not because of luck, but because of time. Ending. You are already in the game. Taxes, banks, interest, inflation, credit, investing, they aren't random forces, they're systems. And the people who win, they don't fight the system, they understand it, then they use it.